G'day. Hey, I am John O'Reilly from Boost Nest Chartered Accountants, and this is broadcast number 3 in our locked-in COVID-19 crisis. Lockdown series. Anyway, hey, look, I guess there's a bunch of things that we wanted to talk about and share in terms of information. There's obviously been a few more announcements in the last couple of weeks, but most importantly, yesterday, the government had a number of budget announcements, and they've announced some more funding. They've announced extension to the wage subsidies. We've got some information around the new IRD loan scheme. And so today's broadcast is really targeted at addressing any of your concerns, questions that you might have around that. And we've had a few. And so what we're going to do is through the course of the presentation, we are going to run through and cover off some of those bits and pieces. But yeah, yesterday, I think it was 9 a.m. I missed it. I thought it was in the afternoon, not in the morning. Government announced the budget. And look, there is a number of things that were included in there. Some of them, as a whole, I thought it was a bit ho-hum. But the government that is, I think they've got a bit of a tough time in the sense that they've got a number of fires across a number of industries, and everybody's screaming for help. And there's limited options for what they can do, and obviously a limited budget. But I guess the key announcements from the budget, which will most likely impact you, one of them will be the extension of the wage subsidy. So what the government has done is they have said, look, for the next 8 weeks, if you're still really suffering, and what they mean by really suffering is if you've got 50% down on turnover for the same 30-day period compared to 2019, you can get an extension of 8 weeks on your wage subsidy. So same maths, but it's now 8 weeks instead of 12, so it's still $585 for a full-timer and $350 for a part-timer. Obviously, those numbers multiplied by the 8 weeks to get an understanding about what the actual payment per employee is. And it is exactly the same process as the original 12-week subsidy, which is basically you go on to the MSD website, you go through a couple of links, you post your employees' details, whether they're working 20 hours or more, 20 hours or less than 20 hours, and then you hit submit. So it's very much the same process, which is good. A couple of areas, other parts of the economy that they've decided to help out a little bit is they've chucked some more money at businesses that are specialising in R&D. And so I think there's 145 million heading to through Callaghan Innovation in order to help out with R&D and continue to give research and development of products and ideas a helping hand, because often R&D expenditure is one of the first things to go in a recession. The other thing is they've announced, I think it's another 400 odd million to directly help New Zealand trade and enterprise, targeted at helping giving help to exporters and making sure that they can stay competitive and really giving them some support, but not a huge amount of detail on that. They've also announced, I think, $1 billion worth of spending to create 11,000 new environmental jobs to support DOC and to, obviously it's a green initiative, basically to tidy up some of the, tourism tracks, dock landscape, pest control, those sorts of things. They've also announced that they want to build another 8,000 homes, mainly focused at lower social economic help. And helping those at the lower end of the social spectrum in terms of financials being able to get into those homes. And of course, the first question that I had as soon as I read that line was like, okay, well, who's going to build them? And that's really where the next step comes in, which is they announced $1.6 billion to assist trades in getting apprenticeships going through the likes of your Massey universities and all those sorts of things. So some more spending in order to get more apprentices, because obviously with the restrictions on travel, a lot of workers that had come to New Zealand in order to support the building industry have had to return home, and there's probably no time frame on when those people would be able to return. So we've really got to generate some of that workforce internally, and so the $1.6 billion is targeted in order to do that. Tourism's got a light bit of income. Basically, the government's chucked in 400 million for tourism, and Kelvin Davis, who had been a little bit AWOL as part of the tourism, for the tourism portfolio, basically stated, look, the 400 million's there to keep key New Zealand tourism attractions afloat. So obviously like Whale Watch Kaikoura, and those sorts of things. There's also been, from memory, $1.2 million targeted for infrastructure on top of the money that they've already talked about in terms of infrastructure spend in the last month or two. But they are also looking at throwing some more money into rail, which, look, I don't know much about rail, but I did make a trip up to Gisborne start of last year, and it was interesting. Thought that it was, spending on rail wasn't really going to be that effective for the likes of the Gisborne area. Obviously, it's a more of a political thing than potentially a real support to local freight. But they're basically saying that between Gisborne and Napier, I think there's something like 800 trucks were going through every week, and if they put a rail line in, because of the limitations on the geography and the train line, like they'd only be able to, it would only reduce that trucking, those trucks by 15 a week. So yeah, in my mind, probably a little bit questionable about rail, but yeah, anyway. So look, special thanks to Bell Gully lawyers, who they put together the analysis of the budget, and of course that was supplied to us by our good suppliers. Well, our suppliers, whether they're good or not, who knows, but Walters Kluwer, so they put that through to us. But other than that, in terms of the budget, there were no further tax changes, so they haven't looked at changing the GST rates, company rates, personal tax rates, and look, it'd be fair to say that they've got pretty limited scope to do that. So, we're talking so far about a $62 billion response package to COVID-19 and the recovery. And so the question is really how is the country going to fund that? Obviously, there's going to be an element of borrowing, but the only other real option that we've got is taxation. And so by reducing company tax rates, GST, those sorts of things to provide that type of support was simply too costly with the amount of money that they are looking at spending in order to put money into people's pockets and into certain parts of the economy. So no tax changes, but a summary of the tax changes that have happened so far are they've introduced a loss carryback scheme, which basically means if you had a profit in 2019 and a loss in 2020, then you can take the loss in 2020 and offset it against the profit you had in 2019, and then whatever tax that you paid would then be refunded out to you basically now. So for a lot of businesses, they probably haven't really felt the impact until the lockdown occurred, so it's not really going to have that much of an immediate impact. There will be some, obviously, logging, those sorts of industries where exports where they're primarily dependent on China accepting the product, and that got turned off in about January, February. So those guys, there will probably be some elements around there where they will be first cab off the rank in terms of qualifying for that. But the majority of other businesses that we're seeing, it's probably something that will come into effect next year. And have an impact next year rather than anything right now. Obviously, they've thrown a couple of carrots to the commercial property owners, and they've allowed depreciation on buildings again. For small business, for businesses in general, but generally small businesses, you're allowed to basically expense capital items, what would normally be a capital item, something over $500, and we depreciate it over a couple of years. There's been some changes around those limitations now, so that has increased from $500 to $1,000 permanently, and $5,000 for this year. So look, that's pretty big. There was quite a significant cost to the economy according to Treasury's figures just by making a couple of those changes. Yeah, and then there's a couple of other minor ones that probably won't really be used that significantly in our client scope, which is they've allowed some changing in the shareholding not to affect tax losses. So it's pretty good for encouraging rather than lending money to a company, but investing into it as an owner, and also lifting the provisional tax threshold. So that's good. That'll mean a little bit more cash flow, and those that are just starting to make a reasonable taxable profit, it'll mean that their cash flows a little bit easier this year. But other than that, there wasn't really anything exciting about the budget. Yeah, I mean, some people might be pretty motivated about it, but there's not really that much of interest there. The other, I guess the other thing is they still have, I think, $20 billion in their sleeve, or up their sleeve is probably a better way of saying it, where they haven't earmarked what the money's for. They've just put it aside, or at least reserved the right to draw down and borrow it. So look, it doesn't necessarily mean you know, that they're going to spend it in the next couple of months. It might be something that they hold on to later in the year, depending on what the rest of the global economy and the likes of the US, you know, predominantly how those economies are likely to change, and at least they've got that up their sleeve. But it looks like there'll be a further announcement in terms of government support in mid-August, which is a couple of months away. So I think really what they've announced now is really just to help people give it a little bit of a stable footing. Look, we're not going to upset the apple cart too much more. Look, we understand that there are still some businesses that are pretty critical, and so we're going to chuck another 8 weeks worth of wage support at them. But at the moment, you know, apart from the other tax changes, which should help, you guys will probably just have to work your way through the issues in the situation. So, look, I think yeah, probably couldn't have expected too much more, but there wasn't a lot in there for business. There was a lot of regional stuff. They are a little bit concerned. Treasury forecasts are that unemployment could grow to 9%. So, you know, when they're talking about 8,000 more homes, apprenticeships, 11,000 jobs in the environment, you know, targeted at helping out with the environment. It'll be interesting to know whether those, you know, I mean, Air New Zealand probably had the biggest, you know, redundancies, or certainly the most publicised redundancies in the last little while. It'd be hard to see some of those air hostess going out and, you know, setting possum traps and building huts in the middle of nowhere. So, look, it will, I guess, depend on what the makeup of that skills are in that 9% of unemployment is. So bear in mind our you know, the actual unemployment can't really get below 4% based on the way that they calculate it, because I think there's a cross section of beneficiaries in there as well. I'm not entirely sure where somehow they meet the definition, but you know, they're always part of the number, so it's always a little bit inflated. So, but anyway, a little bit of interest there. They also, Treasury's forecast also got 6% reduction nationwide in house prices. So, look, I guess that is really going to influence the banks a little bit, and I guess flow on for smaller businesses, because it is quite common for, you know, certain asset purchases, overdrafts for small businesses, you know, guys that are turning over less than 4 million to put a slice of the house on the line. If those property prices are going to peak back by 6%, then the banks are going to be able to offer less. So look, these are all just sort of parts of the machine and how the machine works together. So yeah, it's going to be interesting. Plus, I would say there's also going to be some changes to banking, you know, in the near future, because it does look like the Reserve Bank and APRA, I always forget, Michael probably correct me on it, APRA, they're a little bit nervous about you know, house prices and loans and serviceability and the likes of that. So, but Treasury isn't, which is interesting. There was a statement in one of the releases that never in New Zealand history has loan serviceability been such a low portion of disposable income. So basically what Treasury said is look, the cost of having a loan is really low at the moment, yet disposable income is quite high. And so as a ratio between the two, it's quite good, as opposed to having it the other way around, which is where you haven't got a lot of disposable income, but your loan and your loan interest and your loan costs are high, which is bad, simply. But anyway, but yeah, no doubt with unemployment rising, reduction in the economy, Treasury's forecast that look, we'll probably have a 25% retraction in the economy in the next couple of months, but peeing back to roughly 10% reduction from where we were post-COVID by December 2020. So I think those are quite positive from Treasury's perspective. But yeah, obviously some of the other numbers are a little bit wary. But hey, look, with unemployment being high as an employer, and with the possibility of a little bit of growth and support for our clients, unemployment's actually quite good for us because it means that we can get more resources, whereas historically it's been a little bit difficult. So I mean that's also a positive that comes out of a slightly higher employment rate. But yeah. And of course, obviously, if business is down and GDP's down and everything's down, then obviously the tax revenue is going to be down as well. So, I would say the majority of the funding for a lot of these budget announcements and the support going forward is going to be funded out of either borrowing or tax hikes in a couple of years, which not something that would be ideal. But hey, look, words in the mouth. So. Look, the next thing that I wanted to share was the IID loan scheme. Got announced a couple of weeks ago, where if you're a small business and you have less than 50 employees and you have applied and received the wage subsidy, then you can apply for a loan through Inland Revenue, but it is not a loan from Inland Revenue. How it works is you start off, the initial loan is $10,000, and then for every employee that you have, you get an additional $1,800. Yeah, so pretty simple to work out, very similar calculation and dependence on employees as the wage subsidy was. So that's obviously a positive thing, fairly simple. But there are some hooks, which I thought were a little bit interesting. First of all, there's only a small window. So you can only apply for this loan between the 12th of May and the 12th of June 2020. You turn up on the 13th of June and you are out of luck. Number two is it must be a viable business and have proof and evidence that it is a viable business. So what they're looking at doing is saying, hey, look, we only want to lend money to a business that's going to be able to repay us, which is pretty standard. I mean, that's what the banks do. But with this, there's pretty much no application forms. You're not doing a statement of position, you're not providing financials. But IID has got the caveat that if you ask for this money and we ask you to prove that to us that you knew that you were viable, you need to be able to do it. And so we've had a couple of clients ask us for some business plan templates, which we've sent through. So anybody who is looking for a business plan template and needs a little bit of help, give us a buzz. But there may actually be a much better option for you, which I'll touch on a little bit later once I get further down the agenda. The loan application is pretty simple. What I will do is I will try and show you. So here is a publication from Inland Revenue where they have basically outlined the process for applying for the small business loan. So first of all, there's a couple of things you need. You need your bank account number, you need a New Zealand business number, and obviously you need the details of your employees, etc., etc. And the other thing that you need is a MyIR login. And so what happens is you log in via MyIR, and in your home screen, as you can see here, there'll be apply for small business loan under the I want to section. You click on that and then it will start bringing you through a series of these questions where it talks about, about the service, gives you some details of what you'll need, what happens next. And look, don't panic if you don't have all the information, because IID's actually thought ahead of those that might be doing it and they put a save as draft button there, so you'll be able to come back to it. But basically you go through these steps, you talk about your eligibility. Obviously they want you to fill this out to the true and correct. So make sure that you answer those questions correctly. Step 3, as they're working through the process, they'll be asking, details of your employees. And so obviously names, ID numbers, and you need to know whether they're full-time or part-time. And then further down, Once it's all been calculated, as you can see here on the screen, they've kind of calculated it for you. It'll tell you exactly how much the loan is. And what's interesting here is they've given you a loan maximum. So it seems like there's actually an ability to apply for less than what you're entitled to, which I don't really know what the purpose of that would be, but perhaps you want to limit your exposure. Maybe you just want a little bit of a loan. So even if you are only wanting in a certain amount of the loan and not all of it, then you still should put in all your employees' details there, and click next. And I understand the terms and conditions of the loan, etc., and then it will give you a printout and then ask you for it'll ask you for your bank account details, and then the final step is a confirmation and terms and conditions of the loan. So basically it seems like a fairly easy process. Once you've done, you'll be able to go back into the submitted tab within your My IR account and see the submitting and awaiting processing. So ID's come back and said, look, we're expecting to get these out within a couple of days, 5 days to be example, and money should hit your account by then. So look, seems pretty speedy, but yeah. I guess the question is why would you apply for it? I guess everybody's got. I was had a bit of a chat amongst one of my networking groups earlier in the week, and tried to get a bit of an idea about what people were kind of automatically thinking off the bat. Look, from an accountant's point of view, and often from a mortgage broker's point of view, it's a terrible idea to borrow money, whether it be from IID or from the bank, in order to pay your rent, to pay your core operating costs. It's a poor move. Just like purchasing or borrowing to purchase assets that diminish in value quite quickly. In saying that, look, if you were a business and you're looking for buying a piece of machinery, and you can get really cheap finance, which is what the IID loan is, it's only 3% interest rate, then it's possibly easier to get the money from IID than it would be going to Merrick Finance and ticking up, $10K worth of computers or a $15,000 machine, because I think that portion of the finance market's potentially going to be quite hard to get money for going forward. So that's I guess the purest point of view is don't borrow for operating costs. However, and IID's infinite wisdom have made it as, while it's not a formal condition of the loan, their website does state that, where do I have it here, the exact loans, you'll need to confirm the following. There's a bunch of things, most of the stuff I've already talked about. Confirm you'll use the loan to pay for core operating costs, including but not limited to rent, insurance, utilities, supply payments, or rates. Now, that's terrible advice. I know where they're coming from. They're saying, look, we want the loan to be used for business purposes and keeping the business going. But from a reality point of view and an economic point of view, you shouldn't really be doing that, because those things are money that go out the door. It's very hard often to see a return from those directly. Whereas something like a machine, you might be able to get increased productivity. If you needed another van because, say, for example, you're a courier and you can't get finance for whatever reason, and you've already got 2 vans, you've got a couple of guys, etc., this would be a perfect opportunity to go and purchase another van, because at the moment we've got a backlog of parcels. It makes huge business sense in order to use that money to buy another van, to get another van on the road, because there's clearly work there. Whereas IID's requirement for you to use it for operating costs is pretty poor. There's a couple of other things that you need to know. One, the money can't be paid out as a dividend. So if you're operating as a company, you can't take the money from Inland Revenue and then pay it as a dividend to the shareholders, nor can you take the money out and lend it to yourself if you own the company. So say, for example, you're like, really need to upgrade my Maserati, but I'm 20K short. So I'll put in an IID application for this money, and I'll top it up. I'll just borrow it off the business, 3% interest free, yada, yada, yada. I'll chuck it into my new Maserati. Terrible idea, and actually against the terms of the loan. The other terms of the loan is it's got a maximum loan period of 5 years and must be repaid before the 31st of July 2025. The first 12 months are at 0% interest rate, and then for the period after the first 12 months, it's 3% annually, and there is no requirements to make payments before 24 months. You will need to start making payments once you get past the 2-year mark. So, look, there are obviously some positives with that. If you can use that money and you have roughly a good idea about when things are going to kind of return to normal, or you're going to move back into a profit and have the cash flow to make those repayments, that's probably also a key piece of information that you need to make sure that you're lining up your increased cash flow projections with when the money's going to have to be paid back. So that's pretty key. There's a couple of other bits and pieces here. You have to be over 18, which is a bit of a downer because, I was going to get the 11-year-old to set up a company, hire some people and borrow a loan. Can't do that. Obviously, you've got to be an adult. But also there seems to be a bit of a restriction on tax agents, bookkeepers, and other people that may be helping you with your tax compliance in order to have them apply on your behalf. So we've got a particular access into Inland Revenue where we can see people's GST if they're a client, ID, payments, those sorts of things. Last time I checked, they hadn't given us access to apply on somebody else's behalf. So it will have to be through your own MyIR or specific user access granted through your MyIR section. So yeah. Yeah, so look, those are probably the key reasons why I would suggest looking into the loan. Yeah, it's certainly not a no-brainer. It is one of those ones where I think you'd have to have a clear goal and clear understanding about what you're trying to achieve before going down that path. And yeah, I guess there'll be some changes to banking and what the banks are requiring for business going forward. And the question was asked, what are banks going to think if you've applied for the ID loan? Whether they're going to look at your business or look at your financials slightly differently. Was quite an interesting thought or question that was asked. So don't know, but I know that the banks are the Reserve Bank and APRA are a bit nervous at the moment. So it could be that it forms part of the criteria and is something that may be detrimental for loan applications going forward. But look, we're starting to see starting to see residential banking rates for periods, 1 to 2 years, being sub 3s. We saw a commercial rate come out the other day at 2.65, which is phenomenal, especially on commercial. Normally it's a few points higher, but I guess that was just that particular scenario. But yeah, so anyway, keeping in touch, I guess, with Inland Revenue in terms of a topic. ID said, hey, look, we're really wanting to, those that can't pay, get in touch, but don't get in touch now, get in touch when you really need it. Send a bit of a messy communication out, and look, probably for good reason. I think it was Wednesday, they basically turned off the phones. And look, that's my slant on it. That's not their official line, so take it with a grain of salt. They turned off their phones to inquiries that weren't related to COVID-19, which means a bunch of the stuff that we do, we can't organise over the phone. And it probably means things that the average Joe Blogs who might be calling ID can't get in touch with them to discuss. So there has been some clarification. They're interested in talking about COVID-19 problems. They're interested in talking about working for families, and they're interested in talking about child support, because they just don't have the capability with everybody spread out across the country, because obviously the offices aren't open or haven't been open. They just don't have the capacity to go through and take the calls that they had been struggling with in the first place. So it's really just gotten worse for them. So look, if you need to contact Inland Revenue, or you want to ask them about some interest write-offs, or you need to know or want to let them know about making a payment, might be a bit late, or even come up with a payment arrangement for your GS2 provisional tax that's been due, the best way of doing it is through your MyIR. It's allowed the department to really spread out their communications and resource it as best they can. It is quite static. It can be a week or two between replies, but generally they're pretty good. But unfortunately, it's our only option at the moment. So yeah. ID, on one hand, announced the other day also that they're reducing their interest rates on money that you owe them to 7%. So I thought that was very, very generous of them, from 8.65, I think it was. But still, it's more expensive than an overdraft at the moment, or an arranged overdraft, that is. But of course, while they giveth with one hand, they taketh away with the other hand. I don't think that's the Queen's English, but basically, if they owe you money, as in they've got your credit, they're not paying you interest on it at all now. It was, I think, 0.8%, but has now taken a fairly quick decline down to the 0 mark. So at least they're not charging you for owing you, or for you owing them money. That would be worse, and I wouldn't put it past them. I should probably edit that out of what I post on YouTube in case somebody at the department gets a fantastic idea. Let's just charge them on it. Let's just charge them interest whether we owe them money or they owe us money. Couple of other things that cropped out of broadcast too was the regional grant. So that is still operating, and our good friends Mark and Lance at Red Hot Business Coaches, they have still got a sorry guys. So Mark and Lance out at Red Hot are still very much in the space where they're helping businesses through the regional partner network funding, which I think was $25 million announced about 5 weeks ago. Here is a little section of what the eligibility criteria is, and so basically it's roughly about between $2.5 to $5 grand worth of help that you can get from those who have got the wealth of experience of Mark and Lance, or they're not the only ones in Wellington. There'll be a couple, but not many. But basically, what they're doing is they are helping businesses where they might need a business plan, they might need some help with restructuring their HR, they might be doing some training, all those sorts of things, those key elements to help businesses improve and get better while things are not so flash for them. They are the people to talk to. We were asked to do it as accountants, but look, we have got a lot more focus on helping our business clients via a number of changes regarding the tax. So we thought it would be best to really get Mark and Lance involved. So it can actually mean that you get a wealth of information without having to pay anything. You will need to obviously spend some time with Mark and Lance and cover off some of the things that you want, but they can do help you with marketing plans, training plans, giving you some guidance on a whole raft of areas which are really, really useful. And it's pretty low bar to get over. You've got less than 100 employees, got to be GST registered, got to be operating in a commercial environment, and have to be privately owned. So obviously, incorporated societies and charitable trusts are excluded from that. So that's pretty much the only things that we can see that are probably not ideal, because some of those charitable organisations probably do need a little bit of help. But anyway, it's okay. So they're still running. So please let me know if you'd like to be in contact with Mark or Lance from Red Hot. I know they're exceptionally busy at the moment. I heard a story that Lance was up to about 10 or 11 o'clock last night working on information for clients. So look, for them, they are available, and it's probably a bit of a golden period for them. So look, I can't recommend them highly enough. So yeah, get in touch and we can share their details with you and give a bit of a brief. Next, last couple of points were, it was quite interesting. We had a couple of clients ring as we started to transition halfway through level 3, where a number of the staff expectations actually differed quite a bit from reality, which is highly unusual. But it mainly resulted in the likes of the trades where the staff had the expectations where the 585 wage subsidy was a bonus or a benefit that they were entitled to, irrespective of whether they turned up to work or not. So just some real clarity on that. The subsidy of 585 or 350 is to support the payment of their wages. What you contractually are obligated to in terms of asking them to work in order for remuneration. It just fits in as part of that. It's not additional. So it's not like if they come back to work, they get the 585 plus their normal salary. So look, a number of organisations, because they knew there was going to be a change to the working environment, the productivity, the likes of that, they had made an adjustment to, reduction in the wages, reduction in hours, those sorts of things. So if they are coming back into work and they are going up to 40 hours, it's certainly not a bonus. It's just part of that increase in their wage payments. So can lead to a couple of conversations, and probably even more interesting how we transition into level 2, whether how people and how businesses would like to structure their payroll going forward, because I would imagine there are a few who have reasonable size offices here in the city, and they don't want people to come back to work at all because it's still going to require some health requirements, standards, all those sorts of things. You're going to need some resources to make sure that you're compliant. And as soon as you bring employees back onto your premises as the employer, or bring onto your work site or anything like that, you're taking on a lot of responsibility. Whereas if they're working from home, the requirements for all those health and safety, they still exist. They're just not as burdensome, as much of a burden on employers. You've got to clean surfaces, whereas you don't have to, as an employer, you don't have to worry about cleaning surfaces in each of your employees' home. Although maybe that could have been in the budget. Get the cleaning economy up and running. Anyway, I divert. But the other important thing now is to start thinking about is, up until the 7th of May, IRD wasn't accepting any 2020 tax returns. Although they were taking them, but they weren't doing anything with them. They were just kind of, I don't know, in 80s terminology, they were just stuffing them in a pigeonhole somewhere, but they would have been in the system. But now IRD's got those returns open, they're ready to receive them. And so if we need to file some tax returns and get you on board, in terms of getting some of those refunds, some of those credits out, crystallising what your payments to stay compliant need to be, let us know. We can get onto it. We're ready to go. The other element, and I'm a little bit nervous to mention it, is we found out, must have been about December last year or January this year, I can't remember, we noticed that IRD had removed a number of the safety features on the Working for Families tax credit system. So this is where people who have children but still receive some income, but not much income, still get some support. And IRD had a number of safeguards pretty much preventing that money going out where it shouldn't be going out. So if you only earn 20 grand but you won lotto, or you received a $300,000 inheritance from mum and dad when they died, those elements were taken into account to see whether you're eligible for Working for Families. Well, the form that you would put that information on is no longer required in order to release that money. So we had a number of problems last year where IRD were just chucking money at some of our clients because they've never been entitled to family assistance. The only thing IRD knows is they've got a couple of kids, and they're just like they do it with the Working for Families money, and seemed pretty crazy. We raised a number of concerns about it with our account manager, with the Working for Families team. I went so far as to saying that their team wasn't capable of administering the Working for Families tax credit system, which of course didn't go down very well. But the reality is, that's my opinion on it. But yeah, so if you do think you if you believe you haven't had a very good year for 2020 and you've got some kids, get in touch with us, because there will be some Working for Families funding for you. So look, pretty much all the questions, that brings us to the end. If you've got any questions about Working for Families, please get in touch. We had a bunch of questions come in regarding the broadcast, which I have incorporated as part of the answers that we put through. So there's nothing specific. But yeah, other than that, there are no questions have come through on the chat. So look, I hope you found this interesting. We are going to upload it up onto Facebook and YouTube like we have done the last two broadcast sessions, after I've had a time to download it and do a bit of an edit on it, maybe chop out some of the nonsense at the start, where I was having some problems getting into Teams. But please feel free to share it with anybody who you think might benefit for it. Look, it is normally about an hour. This one is a little bit shorter, being about 3/4 of an hour, but look, you can always skip through it. And likewise, on the conclusion of this, you should be able to download the recording via Teams. So, look, hey, thank you very much for joining me today. And look, if we need to, we will do another broadcast and cover off any issues. So, thanks for turning up. And we will take care, and we'll see you next time. All right. Woohoo! 1 attendee. Absolutely fantastic. So yeah, I'm holding this event just for you. Anyway, no attendees. Oh, jeepers, that hurts. Anyway, we'll make up for it in the edits. Oh, was that one of you? That was the attendee, was it? No? Oh dear.